RBI recent discussion paper which has been brought in. Well, I think we have done some assessment, but I would say that as of now, this is too premature to really comment on that because it is still a discussion paper, and we will be reaching out to RBI and also for uh, with our views on what they have proposed, and let us wait for the RBI final decision in this matter. But nevertheless, I would only like to say that we have made some broad assessment, and based upon those broad assessments, even the incremental provisions which are required to be done would not be really significant for us. We will be in a position to absorb those kind of additional provision numbers without much of disruption. And also, the fact remains that if at all those become the reality, maybe the pricing of such loans will also be revisited.
Draft guidelines that the RBI has issued, how do they impact you given whatever exposure you may have to project financing?
No, that's a fair, but then we as a policy say that it is a consultative process of a draft guidelines, so we have no comment to offer at this stage. Even if the impact, it would be a couple of basis points on the credit cost, which is easily manageable as far as the bank is concerned. But then we are looking for a final guidelines and then reassess, evaluate, and come back to the market on that.
It is a draft guidelines. We should wait for the final guidelines because the RBI issued this paper for making the consultative advice for all the stakeholders, whether it is a bank, whether it is a borrower, all they will take the comment also. Because from the regulator point of view, because it is on the basis of the risk perception, timely completion of the project. So from the regulator point of view, if they are thinking, if project which is under construction, if there is a more risk, bank is required to make the more provision, and after construction, if risk has been reduced, so they should reduce the provision requirement. So from the regulator point, it is okay. But whether 5% is okay, it is a matter of the debate also. So RBI has asked the comment from all the stakeholders also. 15th June is the last date. We will discuss this with the among the all the banker in the IB meeting also. Then we will submit our comment. I think there should not be any panic for this. This is my personal view. Yeah.
I don't see any serious threat immediately for the credit uptake or the bank's NIMS margins and all because of this. The reason behind is you can recollect it in the December month. RBI has heavily increased the risk weightages on personal loan portfolio, NBFCs, some CREs, and all certain things. But it has not impacted anything on the credit growth or the demand from that NBFCs or demand from the personal loans and all. Because a part of that, whenever some provisions have been increased by the regulator, the part of that will be passed it on to the ultimate borrowers, and we can easily convince the borrowers and see that they share the burden. I don't think that there is a severe threat on the either credit growth or on the margins of the banks. Maybe slight issues may be there in one or two project fundings where the thin margins are there. Otherwise, I don't see that there will be any big effect on that.
As far as IUB is concerned, we are having a very small portfolio, less than 10,000 crores.
Okay.
The impact on IUB will not be that much, but having said that, these guidelines are only draft guidelines, and unless until the final picture emerges, it will be difficult to go about the impact on the balance sheet. I think it will be very minimum, and of course, if it is implemented, then the cost of lending will increase from bank side, and a part of that will certainly have to be borne by the borrowers.